Hey, Bulls and Bears, you're watching Bull Boom Bear Bust. It is December 15th, 2021. Happy Wednesday to everyone. You may be watching this on Thursday. Either way, thank you very much for being here. Now, before we get started, real quick, please make sure to hit that like button. Make sure you are subscribed and hit that notification bell so you do not miss any of these important updates. So today, let's get another dose of economic reality. Let's talk about the big news, or one of the bigger stories out here recently is the Fed and the Fed meeting. And it's just as we predicted, no immediate rate hikes. In fact, the Fed is forecasting what's going to happen in 2022. And the Fed, they're basically saying they're warming up for rate hikes. The economy is doing good. Well, if the economy is doing good, why not raise rates right now? Why are we talking about what's going to happen in the next 12 months in 2022? Why are we not raising rates now? I thought the economy was doing wonderful. This is an amazing economic recovery. Remember, the economy is recovering. And let's go back to just a few weeks ago. New unemployment claims are at a 52-year low. Amazing, right? A 52-year low. So why are we waiting? Or why are we forecasting rate hikes in 2022? If the economy is good now, let's raise rates now. And if it's a 52-year low, let's go ahead and raise rates to the highest they were in the past 50 years. How's about 17, 18% like we saw in the 1980s? Well, I think most of us here, we know why, because the numbers are cooked. It's phony. This is not an economic recovery. This is a debt bubble that's just being pumped bigger and bigger. And don't take my word for it. Just look at what happened. If the economy was so good, the Fed could raise rates right now, right? I think most of us would agree on that. So why are their words not matching their actions? Right, folks, this just takes common sense to figure out what's really happening. Of course, we look at data, we look at charts, we look at statistics, we look at the news, but just a little bit of common sense will tell you what's really happening in this debt binge economy. The Fed doubles their taper rate, so they're going to not buy so many securities, so many bonds. They're going to pull back a little bit. Talk is cheap. I don't know if they're really going to do that, but this is what they're saying. 3 rate hikes in 2022. Wow. So I guess they know what's going to happen next year, and I guess they have a crystal ball. So I guess the health crisis, that's going to go away. Maybe there's going to be some magic and a whole bunch of manufacturing jobs will come back to the U.S. Maybe that's what they see in 2022. Of course, they didn't say any of that. But what do they see in 2022 as being so good to be able to raise rates? 3 rate hikes in 2022. They must have some very good forecasters there. Well, the truth is, folks, they know that if they raise rates, then the debt bubble is at risk. All right, please let me know down in comments what you think. With the debt levels the way they are now, way beyond any previous time, way beyond the financial crisis, consumer debt, national debt, corporate debt, all at all-time highs, what's going to happen if they raise interest rates? The unemployment rate plunged to 4.2% last month. Another super low number. So that means the economy is doing good, right? So if the number's real, if there's really only 4.2% of people unemployed, why not raise rates now? Why are we talking about 2022 again? Does it make sense to anybody? Or is that a phony number? Is there really 100 plus million people out of the labor force? Yes. So how can the number be 4.2%? I think we all know the truth behind that one. Let's talk about lumber prices. Yes, they came down for a while, but now they're up 127% from the recent low, and this is going to drive home prices up even more. Again, we need higher interest rates to balance this market out. Why are they letting inflation get so bad? Oh, that's right. They're telling us inflation is under 7%. While at the same time not counting rents and home prices in the inflation number. That way they can justify not raising rates sooner, and they can justify not giving out a very big Social Security increase. The cost of living adjustment, also known as COLA. So if they admitted what the real inflation number is, which is over 15% if you look at shadow stats. And that's what it would be today if they went back to the old way of calculating it that they used back in the early 80s. It would be 15%, even higher. But see, then they would have to give out a bigger Social Security cost of living adjustment. And they don't want to do that. So they're just going to stick with the phony, fabricated numbers and hope everybody believes them. And it's not just average consumers that are seeing what's happening. Small business owners have a negative outlook on the economy. Recent survey here, NFIB, plans to increase employment. Only 25% of small businesses plan to increase employment. Plans to make capital outlays, only 27%. Right, let's talk about these markets today, December 15th, Wednesday. All major indexes in the green. And we see the NASDAQ led the way, up over 2% today. So all the money that's pouring into these markets, do they believe the phony numbers? Well, maybe. It looks like it by the way the markets keep going up. And we know a lot of this is easy money from the Fed. Interest rates rock bottom near zero. Companies can borrow, invest. The insiders can then go ahead and cash out their shares. And we've seen a big surge in insiders, executives, CEOs cashing out big portions of their stock portfolios. So what do they see? The writing, is it on the wall? We see oil, it had dipped down to about the $66 range. Now it's back up over $71 per barrel. So we're not likely to see much relief at the pump either. Prices keep going higher wherever you look. We look at rents nationally, they're up 10%. All right, so what happened to the Fed's 2% inflation target? We've zoomed way past that. So the Fed just turns the other way when it comes to certain numbers in certain categories, including rent. And this one's out of Fortune here. Rent's poised to go even higher in 2022. Remember, when you keep the home prices elevated, that also comes back to rents, because the more people that are priced out of the housing market and can't buy a home, the more people are forced to rent, and that causes even more demand and higher rents. So the bubble's going to continue to expand, folks, unless something comes in and pulls the plug on this. Could be some sort of a attack or cyber event, or some other monkey wrench that gets thrown into the system. Many people are saying that that could happen any day. If anyone knows, please let us know down in comments if you have the inside track. And what's this going to mean? Well, more homelessness, poverty worsening, more of the wealthy getting even wealthier, and more crime. So be on the lookout, folks. Stay well, stay safe, keep stacking. Thank you so much for watching this report. See everybody very soon. Bye for now, guys.